Everyone wants to earn an income without making an effort. This is a modern disease. People believe that passive income means being able to sit on a beach while their money multiplies. In reality, they want to get something for nothing, which has never existed in any century I have lived in. When I was young, crowds of people wanting to get rich quick sold gold mines that had no gold in them. Today they sell online courses, crypto coins, and automated trading bots. It is the exact same stupidity, just in a different package. Let me tell you something extremely simple. If it sounds effortless, it is a trap. You cannot hack wealth. You can only build it brick by brick through ownership. Ownership of productive assets that earn while you sleep. And this requires capital, patience, and discipline. 3 things that most people do not have. The irony is that the simplest strategy for passive income has been hiding in plain sight for 100 years. But most investors are too impatient, too greedy, or too easily distracted to use it. Here is the truth. You don't need to trade every week. You don't need fancy derivatives, exotic real estate, or artificial intelligence nonsense. You just need to own a piece of real businesses that produce real profits, and then stay out of your own way. This is the Munger version of passive income. It is not sexy, it is not fast, and it won't make good clips for TikTok. But it works relentlessly, predictably, and mathematically. When I talk about real businesses, I mean companies that sell toothpaste, electricity, food, or medicine. Things that people buy regardless of who the president is or what the Federal Reserve announces. That is why I have always loved businesses like Coca-Cola and See's Candies. People don't stop buying chocolate just because interest rates have gone up. Most people will never build passive income because they misunderstand what passive actually means. They think it means detachment. In reality, it means disciplined indifference. The ability to do nothing when doing nothing is the right thing to do. This is harder than it sounds. In 1970, inflation was wiping out savings, and investors panicked. Everyone was trying to outsmart everyone else. Warren and I quietly bought good businesses at fair prices and held them for decades. That is how passive income is born. Not from action, but from endurance. It's not about owning many things. It's about owning the right things for a long time. You only need a few good decisions in life to get rich, but you must avoid stupid decisions that destroy compound interest. Every decade, a new generation thinks they have found a shortcut. They jump into speculations, dot-coms, cryptocurrency, meme stocks, whatever. Then gravity does its job, and the so-called streams of passive income evaporate overnight. Meanwhile, a quiet minority, the boring, patient investors, continue to collect dividends year after year. They reinvest them, let compound interest do the heavy lifting, and one day, they wake up financially free. No fireworks, no drama, just math and time. If you want a simple passive income strategy, here it is. Spend less than you earn. Buy shares in great companies that pay you regularly. Reinvest everything until the snowball rolls on its own. Never interrupt compound interest unless you have a brain tumor or a better idea, and you probably don't. That's it. No 10-step course, no secret algorithm, just arithmetic and temperament. The problem is not that people don't know what works. The problem is that they cannot stand the boredom of the process. They crave excitement. They chase shiny objects. They want to get rich in 5 years, not in 30. That is why they fail. If you are an average person and statistically you are, then your best move is not to act smarter. It is to act more rationally than the herd. Let others gamble. You just quietly own productive assets and let time turn your laziness into wealth. So yes, there is an ultimate simple passive income strategy for the average investor. It is called patience, and it is the rarest commodity in finance. People say, "Charlie, I want passive income. I just don't know where to start." And I tell them, start by turning off CNBC. Half the battle in investing is avoiding noise. The other half is avoiding yourself. Everyone wants to do something. Damn it. They think wealth comes from activity, from trading, predicting, or chasing the next big thing. But investing does not reward motion. It rewards judgment. And good judgment usually means doing less, not more. When Warren and I were building Berkshire Hathaway, we didn't chase 10 new ideas a year. We looked for one or two that made obvious sense, ideas so simple that even a tired old man could understand them after dinner. Take See's Candies. We bought it in 1972. It wasn't a technological marvel or a turnaround story. It was a good business with loyal customers, high margins, and honest managers. We paid a fair price and never sold it. This is as passive an income as it gets. Owning a company that works while you sleep, run by people who aren't idiots. The work in passive income is not trading. It is calm, rational, independent thinking. It is the effort of saying no 99 times before saying yes once. This is real labor, mental labor. And most people won't do it because it feels like idleness. When you pick the right investment, the world will do the compounding for you. When you pick the wrong one, no amount of enthusiasm will save you. The irony is that investors spend more time picking a new phone than choosing where to park their life savings. They will study megapixels and screen brightness, but when it comes to stocks, they will buy whatever their cousin mentions at dinner. That is not investing. That is gambling with a napkin as a due diligence report. The average investor cannot handle simplicity because simplicity feels unsophisticated. They think passive means lazy, and they are half right. But it is the kind of laziness that requires discipline, patience, letting time do its job. Albert Einstein called compound interest the eighth wonder of the world. He wasn't joking. But the key to compound interest is ignorance. It is restraint. You must resist the urge to change something, to trade, to optimize. Every time you touch your portfolio, you invite stupidity to the table. The stock market exists to transfer money from the impatient to the patient. I didn't invent this phrase, but I have seen it proven so many times that it might as well be a law of physics. Passive income is what happens when you own productive assets long enough for their returns to start replacing your own labor. It is delayed gratification in its purest form. When I was young, I shoveled snow from driveways for $1. That was active income. When I bought good companies and reinvested the dividends for decades, that was passive income. One required muscle, the other required not being an idiot. Now you might think, but Charlie, the world is different now. Inflation, bubbles, wars. Let me tell you, it has always been different. In 1950, we had a nuclear scare. In 1974, we had oil shocks. In 2008, we had a financial collapse. And yet, through every panic, people still brushed their teeth, ate breakfast, and bought chocolate. If you owned the businesses that sold those things, your income kept coming. This is a fundamental truth. Own what is durable. If you have to pick an index, fine. Own the S&P 500 and let it sit. If you want dividends, buy great dividend payers that don't need financial engineering to stay alive. Just don't jump ship when the market sneezes. A good passive income strategy doesn't require genius. It requires stubborn rationality, the ability to hold assets through storms, noise, and human stupidity. You don't need to predict the future to win. You just need to avoid being the guy who sells his future every time the headlines scare him. This is the only job an investor has to do. Think clearly, buy carefully, and wait longer than anyone else can stand. Everything else is motion, not progress. If you ask me what true passive income looks like, I will tell you that it's not a YouTube channel, not a crypto farm, and not a rental property that you pretend manages itself. It is a dividend check. This tiny piece of paper, or its digital equivalent, represents something sacred in capitalism. A share of the profits from a business that operates without your permission. When I first grasped the essence of dividends, I realized that the goal was not to make money fast. It was to own something that keeps making money, even when you do nothing. A company paying dividends doesn't care if you are sleeping, retired, or out fishing. If it earns, you earn. That is the only kind of passivity I trust. Of course, people have managed to ruin even this simple idea. They chase high yields, just like moths fly to a bright light straight into the flame. They see some obscure company promising a 10% dividend and think, this must be good. Well, in my experience, a high yield often means high risk disguised as generosity. A business paying 10% is probably not retaining much internally. It is returning your money to you, plus some illusion of income before falling apart. You want dividend growth, not the allure of a dividend. A business that raises its payouts every year quietly, consistently, is a far greater ally than one that flashes big numbers. That is why we loved companies like Coca-Cola. They sold sugar water to billions of people, and they never stopped. Every quarter, they sent a small slice of profits to shareholders. Nothing glamorous, nothing thrilling, just reliable human behavior turned into cash. You could call it the capitalist version of gravity. Here is what most average investors miss. Passive income is not the amount you collect today. It is the reliability of what you will collect in 20 years. A good dividend company is like a productive orchard. You don't chop down a tree for firewood because you are cold this winter. You wait, you water it, and it gives you fruit every season. That is what dividends do. When reinvested, they turn the fruit back into even more trees. Eventually, you are managing an entire orchard without having planted a single seed. It is slow, it is boring, and it is the most beautiful compounding machine capitalism has ever invented. Let's be clear, not all dividends are equal. Some companies pay them because they have matured and generate more cash than they can effectively reinvest. Others pay them because management has no clue what to do with the money. You want the first type, those who pay you because they are so good at business that they can't help it. And once you find them, your only job is to remain loyal longer than anyone else can stand. In 1999, when everyone was drunk on dot-com dreams, people scoffed at old dividend stocks. They called them boomer relics. Then the bubble burst. And guess what? The boring companies kept sending checks. You don't beat inflation or recessions with cleverness. You beat them with endurance. A company that can continue to increase its dividends during war, inflation, or financial panic, is the absolute ally for a long-term investor. This is passive income in the truest sense. Not a gamble, but a reality-based stream of cash from the daily activities of society. And here's the punchline. You don't even need to pick them yourself. The Dividend Aristocrats Index, companies that have raised payouts for 25 years or more, will do the job perfectly. Let the fools chase trends. You just keep collecting, reinvesting, and accumulating, because the dividend that never sleeps will ultimately outwork every entrepreneur chasing the next fad. It's not exciting, it's not viral, but it is the closest thing to financial immortality that the average investor will ever touch. If you want to understand why so few people get rich the slow way, it is simple. They cannot stand boredom. The market rewards patience, but human nature punishes it. Most investors lose not because of volatility. They lose because they cannot stop touching their money. They open their portfolio every morning as if measuring their blood pressure. They see a red number and panic. They see a green one and get greedy. And both reactions make them do stupid things. In my life, the smartest investors I have known had something in common. They were completely comfortable doing nothing for years. Not frozen, not scared, just content to let time compound their advantages. Warren once said, "The stock market is a device for transferring money from the impatient to the patient." He wasn't joking. Every tick, every news headline, every expert forecast, it all exists to test your ability to sit still. When I call patience a strategy, people laugh. They think I am just trying to be original. But patience is behavioral alpha, an edge created by temperament, not intellect. In a world of flickering screens, it feels almost rebellious just to hold. But that is exactly where the edge lies, in refusing to join the stampede. The so-called boring buy and hold strategy of productive assets is not laziness. It is selective inaction. It is picking moments with surgical precision, and then letting compound interest do the heavy lifting. Most people are financial tourists. They visit investing the same way others visit a casino, chasing a thrill. The few who get rich treat it like owning farmland. They plant, they water, they wait. They don't dig up the seeds every week to see if they have sprouted. That is what I call the boredom premium. The returns you earn simply for outlasting everyone else's attention span. In 1974, when the markets fell by 50%, most investors couldn't sleep. We quietly bought, not because we were smarter, but because we didn't need emotional stimulation to feel alive. That is the difference between an investor and a speculator. Speculators need dopamine. Investors need discipline. Passive income isn't just about money working for you. It's about you not working against yourself. Every impulsive trade, every quick opportunity, every emotional decision is friction against compound interest. And friction kills wealth. The truth is, the average investor's worst enemy isn't inflation or taxes, it's restlessness. They mistake motion for progress, like a hamster thinking the wheel is taking it somewhere. Boredom, paradoxically, is the price of prosperity. If your strategy never bores you, you are probably doing something wrong. When people complain that index investing or dividend reinvestment feels too dull, I remind them that watching grass grow is too. But have you noticed that the grass always wins in the end? Great investing looks like nothing is happening. Then, a few decades later, people call you a genius. So the next time someone asks about your passive income strategy, tell them the truth. You buy productive assets, you hold them, you reinvest, and you wait. They will look disappointed because they wanted a magic formula, not arithmetic. Fine, let them be disappointed. Their impatience is your advantage. That is the essence of compound interest. It quietly rewards those who can endure long periods of seeming emptiness. The world keeps chasing noise. The rich keep collecting dividends. This is not luck. This is emotional endurance turned into money. Let's talk about a disease that destroys more portfolios than inflation, taxes, and bear markets combined. It's called tinkering. The average investor cannot resist the urge to tweak something. They adjust, they tinker, they tune, they rebalance, they take profits and cut losses. They turn compound interest into confetti. They think activity equals control, but every click, every trade, every adjustment costs them something. Fees, taxes, or worse, emotional whiplash. Most people don't realize how much wealth they lose to tiny, constant tinkering. It's like termites in a wooden house. You don't notice them until it collapses. If you truly want passive income, stop treating your portfolio like a pet. It doesn't need daily attention. It needs time. Here is what happens to most average investors. They buy when prices are high because everyone feels rich. Then they sell when prices drop because everyone is scared. That's not investing. That's peer pressure with a brokerage account. In 1973, during the oil crisis, people panicked. They sold blue-chip stocks for pennies because they couldn't stand the sight of red numbers. Meanwhile, we bought businesses that would survive the panic for a decade. The irony: those who stayed calm and reinvested dividends made a fortune. Those who decided to play it safe by selling missed out on the single best buying opportunity of their lives. Passive income is not clever market timing. It is the refusal to be part of the crowd when the crowd goes crazy. Remember this: markets don't destroy wealth. Behavior destroys it. You don't need more IQ points to succeed in investing. You need fewer emotional breakdowns. Most investors could double their lifetime returns simply by checking their portfolios once a year. But they won't do it because doing nothing feels irresponsible. They want to feel in control, even if it costs them performance. That is why the simplest passive income strategy will always outperform the complex one, because simplicity minimizes tinkering. Buy broad, reliable cash-producing assets. Hold them. Reinvest the cash. Ignore the noise. Every study I have ever seen says the same thing. The best performing investors are either dead or have forgotten they have an account. That tells you everything you need to know about human nature. The market is a machine designed to test your emotional stability. Every headline, every tweet, every talking head is trying to make you react. But you don't get rich by reacting. You get rich by not reacting. Think of your portfolio like a bar of soap. The more you handle it, the smaller it gets. That is why the great irony of passive income is this: you earn more by doing less, but you need tremendous discipline to do less. And discipline is rarer than intelligence. I have known very smart people who could recite every financial ratio, but still lost money because they couldn't control their own temperament. Meanwhile, an ordinary Joe who quietly bought dividend stocks, reinvested, and stayed away from the noise ended up with more wealth and less stress. The difference wasn't knowledge, it was behavior. You see, the real secret to passive income is not where to invest, but who can stay invested. If you can control your impulses, you will outperform 90% of investors. If you can't, you will ultimately fund someone else's patience. The market has a cruel sense of humor. It always rewards those who least need reassurance. That is why I tell people, don't try to outsmart the market, outweight it. Because the longer you wait, the more the math tilts in your favor, and the less your emotions can sabotage you. So the simplest passive income strategy is not found in a spreadsheet. It is found in self-control. And that is something no broker, guru, or algorithm can sell you. I have spent my life surrounded by smart people who couldn't sit still. They read every report, memorized every financial ratio, and still managed to underperform chimpanzees picking index funds at random. Why? Because they mistook busyness for intelligence. They thought thinking faster meant thinking better. It doesn't. If you want to be a rational investor, learn to do what most people find impossible. Wait without anxiety. Patience feels passive, but it is the highest form of activity in investing. It is like a chess grandmaster who wins by not making a move too early. Amateurs keep playing for drama. Masters play for inevitability. That is the difference between trading and owning. Trading is about moments. Owning is about decades. The simplest strategy for passive income is to buy a slice of capitalism and never interrupt it. Own the productive capacity of human civilization and let it pay you. When you buy a Dividend Aristocrat Index Fund, or a REIT that leases to reliable tenants, you are essentially saying, I believe that over time, people will continue to brush their teeth, eat food, and pay rent. Right, it's not optimism, it's realism. You don't need faith in Wall Street. You need faith in human habits, and those rarely change. But here is what most people don't understand. Doing nothing is not the same as being lazy. Doing nothing when everyone else is panicking is an act of courage. It is a rational defiance of collective madness. In 1987, the market dropped 22% in a single day. We didn't budge an inch, and not because of some secret formula. We just knew that a great business would still be a great business a week later. That is exactly how passive income survives any chaos, by simply refusing to participate in the panic. And let's be clear, inaction does not mean ignorance. You keep reading, reflecting, and staying alert, waiting for a genuine opportunity, the kind where the odds are absurdly in your favor. But until that moment, you sit tight, because compound interest only works when you don't get in its way. Everyone dreams of compounding their returns. No one wants to compound their patience. Yet patience accumulates much faster than money. Every day you don't sell a good asset. You let time keep score for you. Think of it this way. If you find one worthwhile idea every few years and avoid stupidities in between, you will outperform almost everyone who tries to find 10 ideas every month. In my world, intelligence is not knowing what to do, but knowing what not to do. It is the ability to skip bad opportunities, ignore the noise, and keep your sanity while the rest of the world loses its mind. You don't need a constant adrenaline rush to get rich. In fact, it should be avoided at all costs. Excitement is what casinos sell. Wealth is built on boredom. I have seen geniuses go broke because they couldn't stand quiet markets. They needed action. They needed proof of their own cleverness. They were too smart for their own good, and they outsmarted themselves into mediocrity. Meanwhile, the old man holding dividend stocks and ignoring Wall Street headlines looked like an idiot for 10 years, until compound interest made him a genius. So yes, doing nothing is the smartest move an investor can make. But it is also the hardest emotional test. It requires faith in arithmetic, not in adrenaline. It means trusting the fact that time will work harder than you ever could. If you ever get bored with your investments, excellent. That is the sound of compound interest working in silence. If you feel the itch to do something, stop and ask yourself, am I improving the process or just trying to feel useful? Because the market doesn't pay for your effort, it pays for your endurance. And the few who grasp this truth don't just make money, they buy themselves peace of mind. Most people assume that wealth comes from intellect. It does not. It comes from behavior that looks stupid for a very long time. You buy good assets. You hold them through bad times. You reinvest what they pay you. You ignore everyone who says you are doing it all wrong. That's the entire formula. It doesn't sell books, and it won't impress your friends. But it quietly works while everyone else is busy trying to look smart. The great delusion about wealth is that it is created by brilliance. In truth, it is created by monotony. It is built through the slow, patient repetition of sensible decisions while the world loses its mind. The market does not reward geniuses. It rewards survival. If you want passive income, understand that it is not a gift. It is the reward for surviving your own impulses long enough. You must endure boredom, ridicule, corrections, crashes, and any illusion of control. You will watch friends make fast money on trendy themes. They will mock your boring dividend portfolio or dull index fund. And for a while, they will seem right. Then the music will stop. Their luck will evaporate, and your boring strategy will continue to quietly pay you quarter after quarter, year after year. It is at this moment that you realize something profound. A true passive income strategy doesn't just grow your wealth, it trains your temperament. Because it's not just about earning while you sleep. It's about sleeping peacefully while others panic. When you understand the essence of compound interest, you stop needing thrills. You stop chasing magic. You begin to appreciate the beauty of the concept of enough. That is another word people misunderstand. Enough is not about giving something up. It's about control. It's about not letting greed turn you into a fool. In 1999, everyone wanted to double their money overnight. They thought we were dinosaurs for holding businesses like Coca-Cola. Then the dot-com bubble burst. The new economy crashed, and suddenly dinosaurs like us were still standing. There it is, the payoff for rational patience. You don't get rich quick, but you stay rich forever. Passive income is a symptom of good behavior repeated over decades. It's not magic. It's not a life hack. It is a discipline that looks dull until it works, and then it looks inevitable. People want to feel like they are doing something. Fine. Here is what you should do. Automate your savings, reinvest your dividends, and increase your contributions every time your income goes up. And then go live your life. The less you think about your portfolio, the more it thinks for you. That is why I laugh when people say, "Charlie, I don't have time to manage my money." Excellent. That is an advantage. The less time you spend tinkering, the better your results will be. Wealth isn't about constant attention. It's about detached attention. You design a rational plan once, and then you let time handle the compounding. The stock market inherently punishes impatience and rewards discipline. That is why 90% of people never achieve passive income. They confuse entertainment with strategy. They want the market to be exciting, but the best investors lead boring financial lives and exciting personal lives. You want adventure? Go to the mountains. You want freedom? Learn to sit still while your money multiplies. That is the real magic of passive income. It's not that money replaces labor. It's that discipline replaces noise. And once you grasp this, you stop asking what to buy. You start asking what to ignore. This is a mental shift from amateur to investor, from active to passive, from chaos to peace. And peace, not profit, is the true dividend of financial independence. A strange moment arrives after a few decades of patience. Your money starts working harder than you do. That is when you realize the game has flipped. Now time is working for you, not against you. Most people never reach this stage because they keep firing time as their employee. They interrupt the compounding. They withdraw money too early, chase trends, or get spooked by headlines. They trade the goose for an egg. Passive income isn't a mystical state. It is compound interest allowed to mature. It cannot be rushed, and it cannot be outsmarted. It can only be cooperated with. That is why I call time the greatest business partner you will ever have, and the most unforgiving. It will not negotiate. It will not speed up. It only rewards those who let it do its job. When you start early and stay consistent, compounding looks painfully slow at first. For 10 years, it feels like nothing is happening. Then, in the next 10 years, the process starts moving, and after that, it becomes unstoppable. Every reinvested dividend, every untouched dollar, every moment of restraint, all of it later turns into acceleration. You don't see it in real time. You only see it in hindsight, when it's too late for others to catch up. The problem is that most investors want growth without the wait. They want the results without the process. They treat wealth like a microwave dinner. Fast, hot, and empty in 5 minutes. But compound interest is more like a slow-cooked stew. It requires time, discipline, and a willingness to leave it alone. You can't keep lifting the lid to check how it's doing without ruining the flavor. The irony is that the older you get, the more you realize that time was always the true leverage. Not the leverage of borrowed money, but the leverage of patience. When I was young, I thought wealth was about picking winners. Now I know it is about holding them. If you had bought a dividend stock yielding 3% that grew its payouts by 5% a year for 30 years, you would have an income stream outpacing inflation without lifting a finger. No hedge fund magic required, just the quiet compounding of time. And yet, people chase speculative nonsense every year because they cannot stand the wait. They sell slow progress for a quick high. It's like trading a vineyard for a glass of cheap wine. The goal is not to get rich next year. The goal is to never be poor again. That is what passive income really is. Not a luxury, but security. It's the ability to say, my assets are working harder than I ever could. Warren and I often joked that our secret was sitting on our asses for decades while everyone else jumped around. But it wasn't a joke. It's the truth. Time made us rich because we let it. If you treat time as an enemy, it will punish you. If you treat it as an ally, it will do the heavy lifting. Think of every dollar as an employee. Send it out into the world and make sure it comes back with a couple of friends. Then let those friends go to work as well. That is compound interest. But if you constantly pull your dollars out for every impulse, a new car, a shiny gadget, a hot stock tip, then you are firing your employees before they finish their training. You want passive income? Stop interfering with your workforce. Wealth doesn't grow because you make brilliant decisions. It grows because you make fewer bad decisions and let time polish the good ones. This is the simplicity that no one wants to hear, because it means the secret is patience. And patience doesn't sell courses, but it builds empires. So, if you want time to work for you, here is the contract. Don't rush it. Don't interrupt it. Don't try to outsmart it. Just let it compound quietly, stubbornly, relentlessly. One day you will wake up, and your money will be your most loyal employee. It won't complain. It won't call in sick, and it won't retire before you do. That is what I call the only truly passive income on earth. The hardest part of getting rich is not the beginning. It is what happens after things take off. Success has a strange side effect. It whispers to you that you are smarter than you really are. And the moment you start believing it, the downfall begins. I have seen it countless times. Someone builds a solid portfolio, the dividends start rolling in, their net worth quietly grows, and then they start getting cute. They start thinking, maybe I can do better. They sell boring winners to buy exciting stories. They take on leverage. They try to optimize, and just like that, they strangle the goose that laid the golden eggs. The temptation to tinker never disappears. It just evolves along with your balance. When you are poor, it's the greed for fast money. When you are rich, it's arrogance, the belief that the rules no longer apply to you. But compound interest doesn't care how successful you feel. The moment you interrupt it, the magic stops. In 2008, I watched investors with decades of profits throw it all away because they couldn't stomach temporary paper losses. They sold wonderful businesses at panic prices, convinced they would buy back cheaper. They never did. Fear destroyed what time had built. That is why I say the first rule of compound interest is never interrupt it unnecessarily. People think I'm joking. I'm not. This single habit separates the permanently wealthy from the temporarily lucky. You see, true passive income is not a number. It is a mindset. It is understanding that you don't need to touch a system that is already working. You just need to feed it. And feeding it means staying boring. Boring investments, boring habits, boring decisions, repeated constantly. The world will mock you for it until they lose the ability to afford their mockery. When we bought C's candies, people called it a grandpa stock. Too dull, too small. They didn't understand that boredom compounds capital better than excitement ever could. Year after year, that boring candy business produced cash. Cash that bought even more businesses, producing even more cash. That is how you build passive income that lasts, not by chasing novelty, but by doubling down on reliability. There is a reason Buffett and I never traded our core assets like day traders overdosed on caffeine. We understood that wealth is the child of patience and discipline, not creativity and chaos. Nevertheless, people sabotage themselves in two ways. They either try to accelerate compound interest, or they protect it too aggressively. Both are mistakes. Accelerators start gambling, adding leverage, or chasing risk for higher yields. Protectors fall into paranoia, selling everything out of fear of a crash. Either way, they break the chain of compounding. The goal is not to avoid all risks. The goal is to avoid unnecessary risks. If you own productive assets with strong economics, your main job is to stay out of their way. You don't constantly dig up the roots to check on the tree. You let it grow, you water it, you protect it from storms, but you never, ever uproot it just to admire it. Every time you sell a compounding asset, you fire a worker who never needed sleep, and they aren't coming back. So, if your portfolio is generating cash and growing steadily, for God's sake, leave it alone. Your emotions will beg you to intervene. Your ego will tell you that you can improve things. Your friends will boast about their big wins. Ignore them all. They are renting excitement. You are buying freedom. And freedom, once bought with patience, is the only wealth that matters. If you remember nothing else from this whole speech, remember this. Getting rich is easy. Staying rich requires discipline. The average investor never learns the difference. They think passive income is the right stock, the right fund, the right trick. It is not. It is the right behavior maintained over a long period. You don't need to have 20 more IQ points than your neighbor. You just need 20 fewer moments of stupidity. Here is what works, what has always worked, from the Great Depression to whatever you want to call this modern circus. Spend less than you earn. Own shares in productive businesses. Reinvest every dollar of income until the income itself can pay your bills. And for God's sake, do not interrupt the process. That is the whole formula. Everything else, forecasts, gurus, innovative financial products, is noise designed to separate you from your patience. You don't need more complexity, you need more endurance. People talk about passive income as if it is some mystical concept, but it is simply owning property. Own the means of production, whether factories, utilities, software, or farmland, and let capitalism do the work. If you own quality and hold it through the chaos, you will win. Not every year, not every month, but inevitably. This is arithmetic, not prophecy. The world will always invent new ways to distract you. Cryptocurrencies, SPACs, NFTs, whatever comes next, ignore them. Every generation breeds a new kind of foolishness, and every generation believes it is the exception. You will hear friends say, "This time is different." It never is. Human nature does not evolve as fast as technology. The reason Buffett and I succeeded was not genius. It was temperament. We were willing to be boring, while everyone else was busy being dramatic. Most investors cannot stand simplicity because it does not flatter the ego. They would rather lose money creatively than make it predictably. But the market doesn't care about creativity. It pays you for patience. The simplest strategy for passive income, owning a good business and sitting still, will never make the headlines, but it will make you free. And freedom is the only dividend that ultimately matters. In your old age, you won't want adventure. You will want independence. You will want a morning when you owe nothing to anyone. That is what passive income buys. Not yachts, not applause, but autonomy. It is the quiet dignity of knowing that your money is working so you don't have to. So, when the world screams for action, remember, wealth does not come from motion. It comes from compounding sanity. People who understand this rule live peaceful, wealthy lives. Those who don't keep searching for shortcuts that do not exist. I have lived long enough to see every fad come and go, but discipline never goes out of style. So, if you want the ultimate simple strategy for passive income, here it is one last time. Buy productive assets. Hold them forever. Reinvest what they pay you. And do not get in the way of the math. It's no secret. It's just common sense, which in finance is as rare as genius. If that sounds too boring, excellent. Go and chase thrills. Someone has to fund the patient people. As for me, I'll choose boredom.